Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, to the 20th of June, 2024. Alright everyone, let's get into it. So apologies for missing the last couple of days of episodes, everyone. I've been sick, you can probably hear it in my voice. I've had a mild cold, not a fever or anything, just a sore throat and a cough, which obviously doesn't allow me to do the refuel if I'm just in a coughing fit the entire time. That's not going to make for a very good episode. But yeah, hopefully I'll be, back, I guess like tomorrow, and I won't have to take another day off. I'm feeling okay. It's just I've still got a little bit of a sore throat and a cough, but that's why I missed the last 2 days of episodes. But back today, and I'm going to dive right into the news. So I think the biggest news over the last 2 days was this announcement from ConsenSys that the SEC has pulled its case against ConsenSys. So basically retracted its case against ConsenSys about investigating if ETH is a security or investigating Ethereum 2.0. And you can see here, ConsenSys put a tweet out announcing this. Now, obviously, this is big news because it's just another win for, I guess, crypto and another loss for the SEC. The SEC is no stranger to losses. I put a tweet out saying that if I'm bullish on anything when it comes to Gary Gensler, it's his ability to lose crypto-related cases, and it seems like he just keeps racking up these losses. Now, of course, technically, this isn't a quote-unquote loss. It's not like they went to court and the SEC lost in court, but it is a loss in the sense that they brought this case against ConsenSys, and essentially was basically a few weeks later, we're like, okay, well, I don't think we're going to do that anymore. We don't think we're going to do that anymore. Let's just pull this case. Now, it's kind of funny because you look back 4 weeks ago, or maybe, you could say like 1 to 2 months ago, the FUD around ETH and Ethereum was like at its peak, right? Everyone was going on about how ETH's going to get classified as a security. There were all these rumors flying that the SEC was trying to classify ETH as a security, and people were saying, oh, the ETH ETFs are going to get denied because of it. And then, of course, you recall, if you were watching back, a couple months ago, the whole time I was saying that we literally had nothing to go off except of rumors and speculation and quote-unquote sources, right? There was nothing official. And then, obviously, the ETH ETFs were approved, right? A lot of us in the Ethereum community believed that they would be approved. And then this ConsenSys suit, or this SEC suit against ConsenSys, has now been retracted. I don't think that's a coincidence, to be honest. I think that the SEC, while they haven't explicitly stated that they don't believe ETH is a security, for reasons that I believe are quite obvious if you kind of dig into the background here, you recall that the SEC has active cases against Kraken, Coinbase, and Binance over them being unregistered securities exchanges, as basically saying that there's a list of these crypto assets, their securities, and that's why they're going after these exchanges, because they're not registered securities brokers. Now, of course, if they were to capitulate on ETH and basically say that ETH's not a security, that acts as precedent for these other tokens. So they don't want to set any precedent here, at least that's my understanding. But it doesn't matter at this point. What matters is the fact that even though they're not explicitly saying that they don't think ETH is not a security, their actions speak for themselves. Approving the futures ETFs, approving the spot ETFs, going after ConsenSys and then retracting this case here. The fact that ETH has been treated as a commodity by the CFTC for many, many years now. The fact that, I think the SEC made a case against Coinbase where they said that Ethereum or ETH could be considered a security, or a token can be considered a security if it has an ecosystem around it. Well, if you were really, believe that, if you thought that that was a strong case to be made, then, why did you basically go after ConsenSys, right? So, if you take all this together, it's just really, really positive for Ethereum. It's really positive on the regulatory front here. And I should actually, backtrack a little bit here and make clear that the SEC filed a Wells notice against ConsenSys. I don't think they ever actually filed a suit against them. It was a Wells notice that basically said, hey, we're going to sue you. And then ConsenSys was like, well, screw you, we're going to sue you first. And that's what they did. And then, obviously, ConsenSys doing that, basically, I'm not going to say it scared the SEC, but they're probably like, oh, wow, okay, let's back off here for whatever reason it is. Now, of course, that doesn't mean that SEC can't come back another time against ConsenSys or other Ethereum-related companies and try to, classify it as a security and so on and so forth. I just don't think that's going to happen. I really don't think it's going to happen. We've seen the political wind shift. We've seen the shift in, TradFi getting really involved with Ethereum now, with the spot ETFs. But beyond that, tokenization that Larry Fink's talking about all the time. The fact that they want to build a new tokenized stock exchange. I mean, the big money is basically saying like this stuff's here to stay. This stuff is stuff that we want to build on. We want to innovate in this area. So essentially, like, stop fucking with it. I think that's essentially what they're saying. And I'm not one for conspiracy theories, but I don't know if there's been like actual communication between some of these big money players and the regulators and the politicians, but for sure there would have to be something. You can imagine that even if there's no direct communication, Larry Fink putting so much of his weight behind crypto would be signal enough to the politicians to basically say, hey guys, this crypto thing is real. The tokenization thing's real. There's a lot of money here. Stop fucking with it. So even if there's nothing explicitly said, I feel like there is a lot of, I guess, background stuff going on here, which is incredibly positive for all of crypto, but for Ethereum as well. Because remember, I spoke, I think a few weeks ago on the Refuel, where I basically said that the fact that ETH now has regulatory clarity means that it opens ETH up to a bunch of different investors that couldn't even buy ETH before on an exchange. Like, not even just waiting for the ETF. They couldn't, at risk of ETH being labeled a security or something like that, couldn't justify the risk. Because to them, it's like, okay, well, if we buy ETH, right? And these are the most conservative of investors, by the way, guys. Like, these are financial advisors and people who manage other people's money. And this money is like not looking for high risk kind of things, looking for very low risk conservative investments here. But when you looked at ETH, like, not only did you have the general risk of crypto, but then you had the regulatory risk on top, where essentially if these people believe that the SEC was going to label ETH as security, that would mean that liquidity for ETH would dry up, because a lot of the places that listed ETH would have to delist ETH, and then it would be very, very hard to essentially kind of get out of the position. But also, you would expect ETH's price to absolutely crater if that was to happen. So that's a huge risk there. So that risk is pretty much gone now. Even, as I said, even though the SEC isn't explicitly saying that ETH is not a security, their actions speak louder than their words ever could. So that risk is now gone, which means that ETH is opened up to a bunch of new investors here, not just via the ETFs, but via everything, basically. And Ethereum as a technology is also opened up here. So that's really, really cool to see. So I'm super excited, of course, about all of that. I'm very, very excited to see crypto racking up more regulatory wins, and I can't wait to see us do more there. Now, of course, on the topic of ETFs, we had a little bit of movement this week on the S-1 forms. So Nate Gerasi here said, here come the spot ETH S1 amendments. This one for Bitwise. Assume others will trickle in over the next few days. So from what I can see, there weren't really any major changes here. There was a few kind of little changes essentially with these things, to be expected, obviously, because we know that the ETH ETFs are basically a copy-paste of the BTC ETFs because they don't have staking, so it's pretty much the same thing, same custody, same disclosures, and so on and so forth here. But, I mean, this is just more positive news, I guess, but at the same time, it's like nothing surprising. We all know the ETH ETFs are going live for trading very, very shortly now, like within the next 2 weeks, probably, maybe even sooner than that. There is a timeline where these go trading next week, or even like there is actually a timeline where these things start trading tomorrow, Friday. But probably not, but it's not impossible. But I would say that we could see this next week. Essentially, we don't have to wait until July 2nd or July 8th, the two dates that have been thrown around here. It could happen next week. I would prefer it to happen in July, to be honest. I have a busy week next week, and I don't want it to happen and then I'm glued to my computer because I got so much other stuff I need to be doing, and I get FOMO sometimes. So me personally, just selfishly, would like it to happen on July 2nd or July 8th. I don't care if my prediction's wrong. It's more the fact that I'd love to be able to just sit on my computer and be locked in without having to be distracted by things. But next week, I'm quite busy with real life stuff. So, if it goes live, whatever, I'll still have my phone. I'll be like, oh, look what's happening here. What's happening on Twitter? What's happening with the price? So on and so forth there. But yeah, as I said, this stuff is fully expected. No surprises here. And I'm not expecting any surprises, guys. Once these are all approved and everything's go, we will see these things start trading within 1 day of that. And I'm most curious to see what the inflows are like. That's still my number one kind of question right now, is what the inflows are going to be like for ETH, especially versus BTC. Now, as I explained the other day, I don't expect them to be as bombastic as BTC because the ETH ETFs are launching in a very, very different environment. But there was actually a kind of ETF that was applied for. Can't remember who applied for this. I think it was today or yesterday, where they wanted to do a BTC and ETH ETF in the same vehicle here. Now, they weighted it 70-30, so basically market cap weighted, 70% BTC, 30% ETH. Now, I think a lot of speculation around the ETH ETF inflows is basically that they're going to see, 30%, maybe give or take a few percent, right, of inflows, because that's just market cap weighted. That's how these financial advisors are going to think about these things. They're like, okay, well, if we have, total of like 5% allocated to crypto out of a whole portfolio, probably not even 5%. They're probably at like 2% or something like that. If we have 2% of a portfolio, or of all the money that we have allocated to assets going into crypto, well, then 70% of that is going to go into BTC, 30% into ETH. And I think that's going to be like that for the foreseeable future, and there will be rebalancing here. So if the ETH BTC ratio goes up and ETH's market cap becomes a greater share of BTC's market cap, you can see that shift to maybe like 60-40 or 50-50. In an ideal world, I want to see it at 50-50, and it's not too far from here. I think if the ETH BTC ratio was to go up to about 0.08-ish, that would be 50-50 split there. So how cool would that be? All the money going into the ETFs would be split 50-50 here, or most of it. So, and we'll actually get to see the effects of that on ETH as both a smaller cap asset, but also a much more scarce asset. People go on about BTC being this really, really scarce asset, but hey, ETH is even scarcer than that because of the fact that we have ultrasound money, right, with the net deflationary burn. ETH is a productive asset that gets locked up in things like staking. So this is vanilla ETH, guys. Like, you got to remember as well, people will say, there's ETH locked up in staking, but people can just buy the LSTs. So in reality, it's not locked. It's like, okay, that's true for like crypto natives. It's true for people that are more involved on centralized exchanges, maybe, but it's not true for the ETFs, because the ETFs can't buy that. The ETFs can only buy vanilla ETH. They can't buy LSTs. Now, of course, market makers, whoever else, or people who want to take profits can sell the LSTs to ETH, and then ETH gets unlocked and sold into the market. But we'll see that happening through the secondary markets or through the beacon chain as well, and people withdraw ETH from there. So when it comes to the actual ETH being bought here, it's coming from the exchanges, and the exchanges don't have much ETH left. And it's not just the exchanges, it's also just like the vanilla ETH pool generally, but it is an incredibly scarce pool here, especially below all-time high. I mean, I don't know, like I'm not going to call anyone, I know I tweeted out about this a little while ago where I said that anyone selling below all-time high is crazy. I kind of, that was a bit tongue-in-cheek. You're not crazy for doing that. You take profits when you need to. I'm not going to judge you on that. But I just don't imagine there's many people wanting to take profits before all-time high on ETH, especially because it's like a thing of, well, BTC already went to all-time high. ETH's going to get there, and then we expect all this bullish energy to come over the next maybe year or so. It doesn't make sense to sell here if you expect ETH to go to 10, 15, 20K. I'm not saying it's going to happen, but as a calculus that you do, selling at the 5K all-time high when, there is a good chance it could go to 10K and beyond from here, it doesn't really make much sense there. And of course, this is going into timing the market and stuff like that. But hey, a lot of people think like this, and I'm trying to put myself in the mindset of those people, because for me, I don't really think about this, because you guys know I'm not planning to sell my ETH. So for me, I look at the price and I'm like, okay, yeah, whatever, cool. But I like the price going up for many different reasons, as I've explained before. Not just for myself because I own ETH, obviously, but it's better for the Ethereum ecosystem for ETH to become more and more valuable. And I don't think there's any doubt that that's going to happen there. But yeah, we're going to see what the flows are like when these things start trading. I'm super excited to finally get an answer to that question, and hopefully put to bed that narrative that was started by one of the Bloomberg guys that ETH is small potatoes compared to BTC. I don't think so. And, maybe it's not going to happen in the first month or few months or something, where ETH might not have the flows people expect them to have. But over the coming years, I do expect ETH to have a very strong flow, especially even compared to BTC, because it's really just going to be ETH and BTC for a while here. So I'm excited for all of that. But anyway, enough on that sort of stuff. Let's move on to some core dev related stuff. So Terence has compiled an FAQ for the top ePBS questions. So he's going to be adding to this. I think this is like a living document here, but this is quite detailed. So if you have been interested in ePBS, what it is. I mean, I've talked about it a bunch of times on the Refuel before, but maybe you're still confused about it. Maybe you don't know what all the moving parts are. I certainly don't. I'm certainly not an expert on it. I'm just mentioning it for you guys because it is something important that's been in research for quite a while and may make it into the protocol sometime next year. So yeah, you can go give this FAQ a read. It's not too long, but it does answer the most pressing questions that I've seen on Twitter about this, so definitely go check this out. I'll link it in the YouTube description below, but not much more to say other than that, since it's just a post that I want you guys to check out there. Second, we have a new round of updates from Josh Rudolph on Verkle implementation, or Verkle tree implementation here. A lot of stuff happening, guys, in the background here. I know that Verkle doesn't get too much attention because of the fact that it's still pretty far away to go live on mainnet. It's probably going to go live, we hope it could go live late next year, so it's still quite far away here. And it's also not something that can be considered, I guess, user-facing. You guys know I like to bucket things into like protocol only versus user-facing, or not protocol only, but like protocol-facing versus user-facing updates. This is definitely protocol-facing, but at the same time, it has a lot of downstream effects for users. So that's why I'm excited about it. And it's also something that's been coming for quite a while as well there. So yeah, you can go check out all these updates in Josh's tweet. I'll link it in the YouTube description below for you to do so. It is quite a long tweet here, but it gives you a lot of context and updates on what's happening in something that you may not be paying that much attention to. But I think Josh is the best follow when it comes to Verkle trees right now. So definitely go follow him and check out his tweet. All right, so something that kind of came out of nowhere, and this is news from like an hour ago. So LayerZero is doing their token airdrop today. They're like a bridging protocol. I'm not an expert on them. I don't talk about them very much on the Refuel, and I'm not talking about them today to promote their airdrop or anything like that. What I want to talk about is the fact that 10 minutes before claims went live for the LayerZero token, they announced that they are going to donate a portion, or I guess like all of these minting fees or these claiming fees from the token claim to the Protocol Guild. So they're estimating that this is going to result in $18.5 million donated to the Protocol Guild. Now, the way this works is basically to claim your ZRO tokens or your LayerZero tokens, users must donate 10 cents in USDC, USDT, or native ETH per ZRO token. That's really new. I don't think I've seen a project do this before, but also just what? It's weird, right? Like for me, like I'm very happy that LayerZero is doing this, but I haven't really seen LayerZero be like, I guess you could call it Ethereum aligned in terms of signaling that they're all about public goods and they're all about the Protocol Guild and stuff like that. I haven't seen that in the past, so that's why it's kind of come as a surprise to me. Secondly, the fact that they announced this like 10 minutes before claims open, it's not a rug, but like, come on, guys. Like, you could have announced it a bit sooner than that. Like, it's a bit random that they did that. I just thought it was out of nowhere, and it just a bit weird to me. And thirdly here, it's interesting that they've done it per token. If I'm reading this correctly, if you had like 100 ZRO to claim, for example, you would have to pay $10 in one of these tokens, which goes to the Protocol Guild, in order to claim the full amount. So it's not just for that 100, it's not 10 cents for the 100 tokens, it's 10 cents per token, which is obviously $10 here. So an interesting approach, and another thing I think users were a little bit upset about, where they're just like, okay, one, why did you announce this so late, I guess, and 10 minutes before the claims went live, and two, why is it per token as well? So I mean, I'm not really complaining too much here because I do enjoy that this is not going to the team, this is going to the Protocol Guild. But yeah, there are a little bit of funny things here that could have been done better. So that I'm just putting this out there for any teams listening to the Refuel, for any people out there who are working with teams that are doing a token and want to do something like this. I think it's an interesting mechanism, but the execution needs to be done better. And by the mechanism, I mean the mechanism of getting people to donate to the Protocol Guild via token claiming. It probably shouldn't be per token. That's not really going to work for everything. I think LayerZero doesn't have like a huge supply or something like that. Like, imagine if you have a protocol that has like a 10 billion supply, and there's like, I don't know, a billion of that is being airdropped. That's head math, $100 million or something like that. Now that would be cool to go to the Protocol Guild, but I don't know if users are going to fork out that much collectively for these tokens. Maybe in the height of the bull market they will, but it just feels very kind of weird there. So I think that per token probably doesn't make sense, but this can be experimented with. You could basically do a thing where it's like, okay, well, you'll do a claim, and essentially with that claim, you'll send like $1 to the Protocol Guild, and then you'll be able to claim all of your tokens. Now, let's just say you have like, I don't know, 600,000 addresses like the recent ZK Sync airdrop. That's $600,000 that goes to the protocol guild. Yes, it's less than what you would have done per token, but it feels, I guess, like better overall, right? Like, I don't know, it just feels more honest overall. And I should mention here that this, as I said, like this is the first time I've seen this done for a token kind of airdrop, but this has been done by the POAP community for quite a while now. So you guys will know that a lot of the times when you're claiming a POAP, especially if you're doing it from ETHStaker during their kind of live stream calls that they do for Ethereum network upgrades. Essentially what they do is they say, hey, can you donate a small amount to this address and then we'll send you your POAP. So these things can be experimented with, and definitely it speaks to what Vitalik was going on about, I think a few weeks ago, where he basically said that, yeah, it's fine to do like permissionless stuff on chain, like celeb coins, meme coins, but it would be really cool if a portion of that was donated to the protocol guild, because you're doing like regen finance rather than just like pure degen finance here. And I think, you know, LayerZero's, what they've done here definitely falls into that, where obviously people are wanting this token because they're speculating on it, and they've been airdrop farming it, so why not get or direct some of it towards the protocol guild? I'm all for that, but I think this mechanism generally should definitely be experimented with more, and should definitely be I guess like iterated on more in a way that doesn't make it feel like the users are being slighted, or it's, you know, dishonest, or it's 10 minutes before the claim goes live. There's just, yeah, as I said, like I like the idea overall here. The execution leaves a lot to be desired. Now, one other thing on the LayerZero airdrop I wanted to point out as well. So this is happening on Arbitrum 1, and actually if you go to rollup.wtf, which tracks the real-time usage of L2s and L3s on Ethereum, you can actually see that Arbitrum 1's TPS is at 54 at time of recording. I saw this spike to 100 before, and I think it went even higher than that. Now, this is where the rollup.wtf website comes in handy and is really, really interesting, is when you can actually know that there's a massive event happening on one of these rollups, and you can go here and see what the real-time TPS looks like and where it kind of goes to, which I thought was really, really cool. Now, on this website as well, I do want to point out that you might see at the top left here, there's like 300 TPS across all of these chains right now. The number one chain is Zai, you can see here, which is doing over 100 TPS. This is not an L2. This is not even a roll-up. This is an L3 on top of Arbitrum 1 using off-chain DA. I would love on the website to be able to get rid of L3s and just have L2s, or get rid of L2s and just have L3s, and kind of filter out those sorts of things, because an L3 and an L2 are very different, especially when it comes to having off-chain DA as well. And on that note as well, I'd love to filter out everything that's not a true roll-up. It's not using Ethereum L1 for data availability here. So we'll see. They're going to keep updating this site. I'm sure that's going to be a feature that gets put there, or something that gets put there soon. But yeah, this is my new favorite site to track basically anything happening in real time on roll-ups. I don't think there has been something like this before. So yeah, really glad that this exists for this right now. All right, speaking of L2s, Base's gas limit has been raised yet again. So as of yesterday, the average fees for different types of transactions on Base collapsed again, and a Uniswap trade is now very, very cheap. It is 1/5 of a cent here. USDC transfer is almost as low as 1/10 of a cent, and an ETH transfer is even lower than that. I believe, if I'm looking at this correctly, it's like 1/20th or something of a cent. So very, very cheap, guys, like extremely cheap here. And it's great to see that Base is continuing to raise their gas limit in order to scale out their execution side of things, since data is not the bottleneck for Base and hasn't been for quite a while, and isn't the bottleneck for any rollups right now, because blobs are near capacity, but they don't, they're not like over capacity for long periods of time. I remember, I think on the last refuel, I highlighted that we were over capacity because of the ZK Sync airdrop. And you can actually see here on Hildobby's dashboard that we're over capacity right now again. So we're over target, I should say. So we're over the three blobs per block target. But this is due to, I believe, the airdrop of LayerZero, because it's happening on Arbitrum 1 there. But you can see that we're hugging the target, guys. Like, some days we're like spiking a little bit briefly over it, coming back down, but we're basically there. And we're not even in like a, I guess, like volatile period right now. Prices are ranging. It's sideways action happening right now. Yeah, there's some activity here and there, but I mean, once that activity starts picking up even a little bit, we're going to be permanently over the target here. So that's going to be very interesting to see what happens to the fees then, because then the fee bottleneck again goes to data, which L2s themselves or the rollups themselves do not have control over anymore, or essentially don't have direct control over it because they don't have control over blobs. They can't just edit the blobs as they see fit, but they do have control over how often they post blobs. They have control over the compression that they do on the blobs and other kind of tactics that they can use to make sure that their blob footprint is lower in order for fees to be overall lower here. But yeah, guys, but like we're hugging it right now. It's crazy just seeing how it's grown so steadily too. It just really is showing once again that the roll up thesis, coupled with blobs, coupled with the full dank sharding roadmap, is really playing out in a beautiful way. And I'm actually curious to see what this looks like in 5-10 years. Like, is off-chain DA just made obsolete one day by this? I don't think so necessarily, but I do think off-chain DA is a niche. It's commoditized already, or DA generally is commoditized, but I think that off-chain DA ends up being a niche, and maybe it really just exists for those really, I guess, like, I'm not going to call it like high performance need use cases, or maybe that's the way to put it, like gaming, for example, and NFT stuff. Maybe it's just reserved for that. But other than that, yeah, I don't really see off-chain DA being like this huge thing. Not something that generates huge amounts of revenue either. I feel like the Ethereum L1 is going to be that, especially with the full dank sharding roadmap for the most valuable L2s out there, the most valuable kind of roll-ups generally. But yeah, anyway, cool to see this. Cool to see Base raising their gas limit again. They're going to keep doing this as time goes on. All right, so last up here on the L2 front as well, Taiko, as you guys know, is a based rollup, and they're permissionless as well, which means that anyone can propose a Taiko block. So it's not just one centralized sequencer that's doing this. There are currently 12 unique proposers that are permissionlessly proposing Taiko blocks. So this, I guess, like in a roundabout way, not in like the full definite way, but in a roundabout way, in like a proof of concept way, should kill the FUD of centralized sequences, because like it's not difficult for us to decentralize these things, and once they're out there, people want to propose blocks. They want to be sequences. I want to permissionlessly propose blocks here. Now, of course, Taiko is a bit different because it is a based rollup, so it's using the L1 for proposals. But that doesn't mean that people can't, with a sequencer, when it's open source and when it's permissionless, people can't run the sequencer and do the same thing here. So yeah, I mean, this is just very cool. Again, once again, like I guess. Plays out with that, proves out that thesis, I should say, on what we're seeing here with the L2s. And I'm just going to bring up L2 Beat here as well, because if you kind of look at, I'm going to go down to Taiko here. Taiko is definitely not full green yet. As you guys know, full green requires a stage 2 decentralization. They're not even stage 1 yet. They're stage 0 right now, but they do have the permissionless validation. So it's when you look at these things and when you look at the stages, you have to look at the pie chart, because different layer 2s will have different sections of the pie chart filled out, which may or may not make them, stage 0 or stage 1 or stage 2. You can see here that Optimism actually has 4 out of 5 green on OP mainnet. Arbitrum 1 has 3 out of 5 green with 1 yellow and 1 red, but OP mainnet is only considered stage 1 still, the same as Arbitrum, because they've got this red exit window here. So there's no exit window essentially for OP mainnet right now. There's none of that for Arbitrum 1 either. And their state validation, the reason why it is orange shell, yellow here, is because it's not permissionless. So there's a lot of nuance here, and you should definitely check out L2 Beat for that nuance. But yeah, and there's a lot of nuance behind what Taiko is doing as well. So I just thought it was cool. I just wanted to highlight that for you guys. I think that's very, very important to keep the, I guess, like pressure on the teams as well. I keep highlighting their competitors doing this too, because we need to decentralize out the L2s. We're on that path to get there, but we shouldn't rest until it's actually happened here. So yeah, but again, I think that's going to be it for the news, but there's a but. I've got a few minutes here. I wanted to talk a little bit about the markets again. Not too long about this, because I don't like talking about the markets too much, as you guys know. But one thing I will say is that I was looking at, I guess, the chart today, long-term chart, the long-term BTC chart, going all the way back to 2012, I believe it was, or 2013. And the reason I was doing this was because there's this, I guess, like very popular adage within financial markets generally, but definitely within crypto, where during this summer, Northern Hemisphere summer period, the market tends to be quiet generally. And this even happens during raging bull markets. So if you go back all the way to like 2012 and you look at what's happening during the summer there, it's mostly kind of sideways here. You go back and you look at 2013, which by the way was a raging bull market. BTC went up to $160 in April, then came down to $73, so went down 50%. More than 50% by July, and then creeped back up and didn't get back to 160 until October. So from April to October, keep these months in mind, guys. April to October, BTC was going sideways in a raging bull market, mind you. Like 2013 was a raging bull market. And then let's just skip ahead to the next one. I've got the chart in front of me here. Maybe I should bring the chart up for you guys to see it on your screen here. So I'm just looking at the BLX, which looks at the all-time BTC chart on the weekly here. So if we go to 2017, I believe it is here. So 2017, you kind of look what happens here. Like, it's not as bad as it was in like 2013, but in 2017 you can see that the price from like June here to around, I guess, October, it's not doing too much. It's not going like strictly sideways, but it's kind of like struggling, right? You can see here that from the top to the basically top here, it's up like 50%, so it's not up that much. But then after that, it went up like over almost 600% essentially to end the year out there. And then you go into, I guess, the next period, which is 2020 here, sideways again, right? And now in this year, again, we are sideways that whole period there. So the reason I bring this up is because usually during those summer months, particularly if you want to take a wide band here and go April to October, it's not very volatile. It's not very, I guess, like exciting within the crypto ecosystem because of the fact that people are outdoors doing things because it's warmer, right? They're not stuck at home doing, and it's not colder at home. Now, of course, I'm just looking at BTC here because you're going to have periods of outperformance in other assets during summer as well. It doesn't apply to all assets equally, but I treat BTC as like the index, both BTC and ETH as the index for the whole crypto market here. Generally, so when you look at that, that's a good way, I think, to look at it there. But in saying that, and the reason why I bring this up is because if you imagine that this is accumulation here on BTC, like I'm looking at the period from, I guess, where's this from? From March to today, which has been 105 days. If you assume that this is going to last till, I don't know, not October because it started in March. Let's go to like September. So, the start of September here. So that's 182 days. So there's another 82 days ahead of us. If you assume that BTC is going to do that, based on historical patterns, just go sideways a bit and then trek up from there, that is kind of very close now. And it can probably start going up again before that, especially given that we have a lot of things on the horizon that are bullish, like obviously the ETH ETF, but also possible rate cuts in macro, which tends to make things bullish for people that trade based on that news and so on and so forth. So when you look at this, the TLDR here of why I'm bringing this up is that there is no need to be bearish. We're literally, it may not be the 4-year cycle, but we're basically playing out similar kind of market cycles that we've had in the past, just on a rather accelerated timeline, at least on BTC, due to the ETFs. And then when it comes to the other assets, I mean, ETH is the same. ETH mostly kind of is on the same footing as BTC. Once it has the ETFs, it'll be on equal footing here. If I go to ETH USD, I mean, the chart very much looks very similar to BTC. Like you can see here, it's very similar to BTC. And then you can even look at like others, which is all of the, total 3, which is the crypto total market cap, excluding BTC and ETH. It's not, I mean, it's weaker overall, but it's still like kind of up here as well. And that is just doing the same thing. It's kind of, I guess, like trending sideways, and it's probably going to, after summer, if the pattern follows, it's going to go up from there. Now, of course, none of this is investment advice, but none of this is technical analysis either. I'm just showing the charts to illustrate my point about those summer lull periods, as it's known in financial markets. Again, this is not a unique insight. This has been around for a very long time, predates crypto by a very long time, many, many decades, if not hundreds of years at this point, of that being a phenomenon there, and it makes total sense. So I think that if you're bored with the market right now, and you live in the Northern Hemisphere and it's warm where you are, probably a good idea to get outside and touch grass. I'm unfortunately not in summer right now where I am in Australia where I live. It is winter. It is the depths of winter. it's like 0 degrees overnight or like 1 degree Celsius overnight. During the day, it's like 10. I don't know what that is in freedom units. I guess I'll look it up for you guys so you don't have to look it up. 10 degrees in Fahrenheit. It's a 50 Fahrenheit for you guys out there. Oh, I should say freedom units, right? But yeah, there's not really going to be much happening besides the ETH ETF. Let's see if that changes things going into July here. But yeah, we'll have to see what happens there. But anyway, that's enough for today. Sorry for a bit of, I guess, like a bit of what's the word I'm looking for? Stuttering in my voice and a bit of kind of slowness in me today. It's definitely because I'm sick. I'm trying to talk and my brain's not working as it normally is. So apologies for that if that was annoying for you guys. But I managed to make it through the whole episode without coughing. So I guess that's a positive. But anyway, enough of that. Thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.